What's happening, traders? Welcome back to another video of a live scalping session, hopefully with the E-mini S&P. But before we dive into that, it is Wednesday, April 22nd today, and our local European time is, well, almost 12 minutes past 8 p.m. Unfortunately, I was not able to have a look at the markets earlier today due to, other activities, but now luckily I do have some free time on my hands and I would like to spend it with looking at what the market is doing, specifically the E-mini S&P. However, when I look at the price action, I see a lot of, holes, right, openings, and it looks like it is pretty choppy, but to make sure, let me clear the DOMs, center them like that. And let's just do some pre-analysis before jumping right into it. We do see some block trades here on the bid levels. Yeah, definitely. So the 58 level, well, let's see what happens when price tends to get close. If it gets close. Okay, so not a real follow through from the buyers. We saw a 135, 153, I believe, contracts printed here at the 59 level. So there was a little bit of absorption, less aggressive attack. The sellers became a little bit more control-ish, and now the buyers basically took back control over that level. Now the sellers attack aggressively, but we do see that, okay, now they cleared that level, but okay, you see that, guys? I see a lot of spread action going on. So it looks indeed pretty choppy. And also it looks like market makers are at play here. You see what is happening? Now this does not look good enough to trade, to be honest, because the market makers' sole task is obviously, to fill the spreads, and we can see it jumping up and down. So at this time, to be honest, I would not like to risk any capital. So I can do two things, I guess, right? Either, come back later, and by that time, hopefully, we do have a little bit more neutral price action, as in, an auction, right? Because from the looks of it, as it is now, I'm not sure if I want to risk any of my money. Or the second option is, obviously, I could have a look at the US Treasury Bonds instead and keep engaged. Okay, from the looks of it, it has reached some kind of equilibrium, but let's just keep an eye on things a little bit longer, just to be sure. Okay, so we do see that the sellers currently are in control. I do see a little bit of absorption here. As soon as the buyers start to backtick, the sellers are again trying to take control over that level, which they just did, but we immediately have an aggressive attack from the buyers. Let's see how this order reacts. Right, so yeah. I believe this year was earlier somewhere here, and now it shifted here, so it could be spoofing. And okay, there we go. Again, we have that spread action, right? Now you see it goes so fast that the order book, look, no guys, I am not trading this. I am sorry, but I cannot please you guys while risking my capital. So what I'm going to do instead, guys, I will go to the ZB and the ZN, and let's have a look here. Let's change this to 4 lots. Right, so on the 30-year, here on the left, we are currently trading at the point of control. And, well, we are just one tick away from the point of control over here at the right on the 10-year. Now already immediately we can notice, that price action, well, at least so far, looks more structural, more methodical, right? In comparison with the E-mini S&P, what was happening there. And yes, we are, volatility-wise, a bit slower in comparison with the ES, obviously, but it does not mean that we can't have any opportunities, right? Now on the 10-year, we are currently also trading at the point of control, just like on the 30-year. And we have an immediate aggressive attack from the sellers on the 10-year, taking control over this year price level at 85. Pretty weak attack from the buyers in comparison with the sellers, who countered the 19 contracts of the buyers with 26 contracts. And on the 30-year, we are still trading at the point of control. However, even though we see a bigger number printed in the inside print or tape from the buyers in comparison with those of the sellers, we do see a little bit of absorption, but let's see how the buyers will react here as soon as the sellers print more than one contract. So we have about 1100, contracts ish, right? Okay, now we also have a tick down, and immediately we notice that a couple of contracts pulled out, obviously, right? And now they are again loading, reloading, or stacking, right? Because the sellers do not attack. So the key thing to look at is not only that these numbers refresh and get higher again, but the reaction, what will happen, right? Because if the buyers put a very large number here, look, and now, because the sellers didn't attack, they pulled out a couple of tens, contracts, right? A couple of dozen contracts, and now the sellers still don't attack that level at 50 with one additional contract. Okay, and you saw that we immediately jumped from 46 to 261, and that level was cleared. All right, now that can be done deliberately to eventually accumulate inventory at lower prices, to see if the sellers still are engaged, right? From the looks of it, they are. So even though we had a tick lower, it was not because the sellers cleared that level through aggressiveness, but it was because buyers deliberately pulled out those 900-ish contracts here as soon as sellers printed about 250-ish contracts. And if they do that, they tend to do that with the intention to see if, let's see if the sellers keep, attacking, or if they are really determined, right, to keep attacking. And from the looks of it, the buyers are now testing the sellers over here, right? So about 1,200-ish contracts on the ask and 1,600-ish on the bid. 208 versus 44. And now the sellers are pulling out to see if the buyers will engage. They did not. That's why the sellers now start to reload and test the buyers, right? One contract, and this number here, that 1,600-ish, did not change. Now, as soon as one contract was printed here, we see that, well, these numbers, some minor pulling is happening. And probably that's due to the fact that, they did not have any kind of reaction after they attacked with one contract only. So perhaps if they can, and look at this, right? Perhaps if they pull out more contracts, they will get the impression if, buyers will test that level or attack it. And, keep in mind that we are trading at a pressure point currently. Now on the 10-year, we do see that, the sellers are definitely controlling the current level at 85, and also at 80, plus they are the aggressors, but it seems like buyers are holding ground so far. And we just had a very aggressive attack from the buyers. Let me try to catch a one tick position. By the way, let me switch over to 8 contracts instead of 4. Now, after seeing a aggressive attack here, right, I noticed that the buyers became the aggressors after the sellers had no real conviction after the pressure point was reached. Now the buyers are again pulling out contracts, and they immediately printed here in the inside print tape after pulling out some contracts. So there was definitely some buyers taking orders after the majority already pulled out, and we just see that we have a very weak attack from the sellers. And again, we do see a little bit of absorption on the 10-year, right? Sellers attack. But again, like I say many times throughout many videos, absorption is one thing, right? But if the sellers attack and the buyers absorb and the buyers backtick like this, right? It usually indicates that this level is probably likely to hold. If the buyers stop attacking, that could be a signal then, to look for the fact that sellers may push through if the buyers give up battle, right? However, if the sellers attack and there is no backtick from the buyers in first place, obviously it can motivate sellers to cross the spread, right? And attack lower price levels first to test liquidity, obviously. And if they notice that there is a lot of pulling, traders and especially, volume-based algorithms, right, who keep an eye on these changing numbers here and here, and obviously what the tape shows, they will also engage. And once they engage all together, then it is pretty sure that, price is likely to, continue lower, right? So now, one positive thing that I do see currently is, yes, the buyers are absorbing, they are backticking, and now they slowly become the aggressors, right? If we look at it diagonally. Plus, they also, in the meantime, took over control at this year price level, but they are still not lining up here at 85, right? So yes, they attack, but from the looks of it, just recontract. So probably they are testing how the sellers will react after a big attack, right? So here over at the 30-year, it looks like the sellers are still in control over that price level here at 50. But if we look at it diagonally, from the looks of it, the buyer definitely are the aggressors currently. And here, still buyers backtick as soon as sellers test those levels, right? With one contract, the buyers attack with 6 contracts, right? So they are definitely in control over this year level, and they are the aggressors. Now we do see 17 contracts attacking again the bid level here at 80. And now the attack of the buyers becomes a little bit weaker from the looks of it, right? So now the roles, obviously, the tables may turn, right? But that all depends, obviously, on the fact that, again, if this is only absorption but sellers fail to attack, it can motivate buyers after testing those levels a couple of times, seeing the reaction. If the attack is getting weaker, then obviously after testing, the buyers will attack or engage at this year level. After, clearing this year level, they will, line up and try to lift the offer. But if, the buyers notice that, okay, there is a potential iceberg order on the sell side, hidden liquidity, right? No matter how much they attack, and if the sellers especially getting more aggressive in their attack diagonally, right? 3 at 85, versus, for example, 30. And if we see 6 and then, another 50, 20 here and 80 here, then yeah, at some point the buyers may puke out due to, the fact that their effort is not getting rewarded. Now on the 30-year on the left, yeah, the buyers are still the aggressors, still not took control over this year 50 level though. Yeah, like the buyers are definitely showing effort, right? So they keep attacking to clear that level, and if it's cleared and they line up here, then probably most contracts will pull out in the ask levels. Now the sellers are getting pretty close to the amount of contracts in which the buyers attacked here at 85. Okay, 3 additional contracts printed on the tape from the buy side. One could even say that it is so slow that it's almost boring. But believe me, it's not, because even though I can go in silence mode every now and then, it's because I'm focusing on these numbers versus these numbers, but also these numbers versus these numbers, right? So, and obviously I do the same over at the 30-year on the left. So looking at these numbers and these numbers, also these numbers and these numbers in this case. Now we do see that the buyers are getting a little bit more aggressive in comparison with previous attacks on this here 85 level. It's still 908 for sellers, so that hasn't changed. And probably, yeah, here you go, right? So a sudden attack from the sellers, but luckily the buyers absorbed, obviously, and immediately the backtick to 85. But they are not as aggressive as the sellers, obviously. Now we do see that these two levels are obviously smaller than the levels below, and we have somewhat of the same amount on the opposite side, right? The current bid and ask level. Above that, again, larger numbers. Okay, 14, 25, 16, 18, okay. Let's see if this is actually, selling pressure or just, block trades to manipulate the price ladder. Because obviously those block trades can have a psychological effect on these here buyers to create doubt, uncertainty. Okay, interesting. Now the buyers also took over control at the 30-year horizontally, plus they are currently also the aggressors. And look at this, now the sellers became just the aggressors on the 10-year, but we do see an immediate reaction from the buyers after absorption took place, right? And I cannot say it enough, guys. Absorption alone does not mean that the price will rotate, right? If there is absorption but no backticking from the buyers to test those levels, and there is no aggressiveness from the buyers showing and sellers are not pulling out, I can guarantee you 9 out of 10 times a mean reversion would not play out, right? And if the buyers only absorb but do not even test, let alone attack that level, right? And instead sellers keep attacking and buyers are, pulling out their contracts, and sellers clear those levels on the bid with lesser contracts than advertised, and buyers start to pull out more, then it could be a continuation from the sell side. And also because we are currently trading at lower volume nodes, right, in comparison with everything above. Obviously these are, smaller in comparison with the other ones. So the 10-year shows that the sellers definitely engaged a attack. Buyers, on the other hand, were holding their ground, and another attack from the sellers, and immediately we have a backtick action with less contracts in comparison with the sellers yet again. So those are the things that we should keep an eye on. 10 contracts versus 3 contracts again. So at this point, either the buyers will give up or the sellers, right? And that's why focusing on the action and reaction, I guess you can call it, from both passive and aggressive participants is very important. And on the T notes, it's obviously, slower, but it can definitely it has also definitely, advantages in comparison with, the E-mini S&P, for example. Okay, we see that buyers are yet again engaging. And look at this, we just had a major attack from the buyers. but from the looks of it, this level did not change a bit. But let's see though if the sellers will do an attempt to attack this year price level, the current bid at the 80 level here, because if the sellers will not engage, obviously the buyers can attack even more aggressively. So it's very important to see. So we have about 2800 versus 5100. So basically to clear this level here, theoretically, currently, right? We should see a number like 7,800-ish. Well, let's say 7,900-ish, or even 8,000 contracts printed here. Well, obviously, if that number is smaller, let's say 5,000, then that would indicate that the buyers would have cleared this year level with now 5,000-ish contracts, with only 2,500 contracts. If this number here reads, let's say, for example, 5,000, right? So let's see if something similar happens. Yes, the buyers are still taking the initiative to attack. And I do believe we had no backticking action from the sellers as of yet. Now we yet again see that the 85 level is dominated by the buyers if we look at it horizontally, and also the current bid and ask level, that the buyers are the aggressors, right? 2,100-ish versus, well, almost 3,000-ish. And we do see the same thing over at the 30 years. So far it looks good, and I do believe that the price eventually will come back in that POC. And if that's the case, my one tick target will be hit. Well, I do believe so far the amount here and here are pretty much in sync when it comes to, this number minus this number to clear that level, right? But it can still change, right? Because we just, after one contract attacked, right, it immediately jumped back from 4,000-ish to 5,500-ish. And now let's see if those contracts that were stacked after that attack at 80, if they pull out and it goes back to 4,000-ish, right? As soon as the buyers again engage. From the looks of it, it did not so far. So 2 contracts, nothing happens here. Now this number obviously is also almost, well, 1.5 times bigger than this year number. Yes, some buyers pulled out their contracts after that attack of the sellers, but the majority held their ground. Yeah, so you can see, right, as soon as the sellers attack, this year number gets bigger, and that may scare off sellers, and especially if the buyers now, also start to backtick again. But to answer that question, if the price will follow through to the upside, right? That's why we have to keep an eye on real-time market data, right? To see the auction happening in real time, and analyzing, studying the order flow, passive versus aggressive flow. Now, obviously, we do see a lot more backticking from the buyers on the 10-year than, on the 30-year. And there you go. Now the 30-year follows. And as soon as the sellers attack that level with an additional 32 contracts at 80, right, the numbers here at the current bid, again, getting bigger. So either it's to intimidate sellers in not attacking those levels, right? Or if someone sold after price broke out of that point of control, perhaps they have accumulated large orders here, and now they hope perhaps price will break out the daily low over at the 60 level. But as soon as they notice, with let's say 5,000 contracts, becomes 2,000, this year becomes 2,000, but this does not clear. Well, obviously they may put limit orders along with buyers, who are holding their ground to exit their position. That's why this number can also become bigger. And now we do see a very large number appearing here. So it could still be the sellers who are, instead of taking limit orders or placing limit orders, right? They are taking market orders to get rid of their contracts faster, right? Instead of 2 ticks, risking that the price will come back and they get out with break even, they can also take market orders here. Plus, it can be the buyers, obviously, taking market orders. So those are the things that you have to keep in mind, and always look at it from different angles, right? Because if you can do that, if you have the ability to basically look into the mind of your opponent on a 3-dimensional scale almost, right? It definitely gives you an edge, at least to stay one step, in front, right? Ahead. One step ahead, I believe is the correct term. Right, so we still see some engagement from the buy side. Either buyers are taking market orders and or sellers who sold here are taking also market orders to get out faster instead of not getting filled here. Especially, don't get fooled by just 1-2 ticks, right? I mean, there are institutions that literally pump millions, right? They buy like thousands of contracts It's ridiculous, right? And you know, they may place limit orders here in the form of an iceberg order. That's why most of the time, if this number gets, for example, 10,000 and this number still stays the same or reloads every time, yeah, that's definitely a potential iceberg order, right? Either from passive buyers or, you know, active sellers who are taking market orders with, and again, one tick, it's like $15-ish for one contract. Now, multiply that by 1,000, you do the math, right? How much one tick can deliver those guys. Okay, now I can basically repeat the same thing over and over, but basically the conditions did not change. I mean, yes, the sellers are attacking, but the buyers are still the aggressors in both cases, right? On the 30-year and the 10-year, if we look at it diagonally, right? Plus, they are still in control of the 50 level here, and also at the 85 level over at the 10-year. Now we do see a little bit more aggressiveness over at the 30-year from the sellers. 35 contracts, 2,000-ish here. Two contracts, one contract, 14 contracts. And the beauty of the strategy, which is currently, I believe, is applied by a institutional player, is that he may every now and then pull out some orders here to induce sellers to attack and keep them engaged, right? At some point he will add contracts and, you know, take market orders to then try to lift the offer. And if the buyer has, let's say, accumulated, well, almost, let's say, 3,000 contracts alone at this price level, right? He's going to place, you know, block trades or spoof orders on the opposite side, right? To keep those sellers engaged. And as you can see, right, and at some point, if he notices a weakness, right, that most of the majority of sellers here are pulling out and not even attacking anymore, right, then he may pull out these contracts. And as soon as the sellers who had entered here notice that, they may puke out at, let's say, you know, one tick profit or break even, and those orders will become market orders, and that will also, you know, drive the price higher. If the sellers pull out here, well, those sellers, by that I mean the buyer who is accumulating ever since the beginning of the session, right? Basically at one price level, if we look at it. And over at the 30-year, we can see that, yes, the sellers are definitely being the aggressors. However, the buyers leave nothing behind. So the same thing obviously is happening over here, right? So sellers keep attacking. However, someone is silently, you know, accumulating from the looks of it. Because if the sellers have, let's say, entered here at the 60 level, they ticked down and they think, okay, let's keep attacking, clear those levels, because we do have a small valley here with two price levels with low volume nodes. So Their intention is basically to get the price either here or even push through there and, test the daily low. Now, obviously, on the 10-year, we have at least visually, somewhat of a better slope for us to see, right? Instead of, with a bump on the slope, so to say. Here, a high volume note. Obviously, on the 10-year, it's a little bit smaller, so... And look at this, at the 10-year, right? So these numbers just became insanely big after, the sellers keep attacking. So the sellers who are currently attacking are not aware that while they think, okay, let's keep attacking, let's clear that level, they are not aware that probably a passive buyer is accumulating at least 4,000 contracts, right, currently alone. And every time the sellers attack, we have some backticking, right? So you see that? Sellers attack, boom, immediate backtick. So on the 10-year, the buyers are still the aggressors. And on the 30-year, it's the sellers. But again, right, we have to look at the overall context on the current dynamics and conditions. And there you go, right? Now, eventually, the buyers clear that level. So the sellers notice that, okay, and they, like I said, as soon as the buyers, keep attacking and being the aggressors, and now again at the 30-year as well, right? They clear that level. It should be very interesting to see if this number here, the majority is pulled out or not. And in the meantime, my target is also hit. Now, I do believe the price may backtick a couple of times before potentially continuing higher. At least if we see that the buyers are successfully clearing this level here and start to test these levels at 95 on the ask, it's very likely that the momentum may continue, right? Now look, there's just some volatility kicked in. It's going back and forth. Okay, and the reason for that volatility is probably because we are about to enter the power hour in 3, 2, 1 right now. Okay, so the buyers over at the 10-year are still the aggressors, and they just cleared that level. And now they are testing the 95, while the sellers still attack very aggressively. Probably it's sellers, let me just, and probably it's those sellers who had entered here are trying to defend those levels, right? Okay, buyers take over control at the 90 level. However, they are not attacking the 95, even though they were actively defending at 90. And now obviously, let me just go with one tick just to be sure, because obviously the 30-year is not as fast as, the 10-year. While we trade in a range of 3 ticks over at the 10-year, we trade over a range of 2 ticks on the 30-year. So yeah, this one is, from the looks of it, a bit more lively. And yeah, it's definitely a nice product to trade, right? However, one benefit of the 30-year is that one tick has a value of, 31-ish, while the 10-year has a tick value of $15-ish. So this is twice the amount. So yeah, I can try to trade perhaps 2 ticks on the 10-year, but in comparison, it will be basically the same if I trade 1 tick, right, on the 30-year. And, to filter out some of the liveliness, the noise, I guess, quote unquote, you can call it, of the 10-year, I will focus on the 30-year for execution. And, once I'm in a position, I will keep an eye on the 10-year, to see what is happening and how that reflects to the 30-year. Now on the 30-year, again, we see 574 versus 34. On the 10-year, we see 61 versus 675. 676, right? One additional contract. So yeah, the buyers are the aggressors after taking over control at this year's previous price level at 85. And let's see if that aggressiveness, keeps going on, and if they will eventually take over control as well of this year level, right? If this number gets bigger than this number, and if either sellers pull out like they did just now, right? And if the buyers will line up, I wanted to say, but that is exactly what happened, right? So the market was just a step, in advance. So now we see that 2 levels, the 90 and 85, basically the buyers were dominant, right? Those who are in control. And also we had diagonally showing that the buyers were the aggressors, but those levels just cleared. Let's see though. So one could now say that the sellers are the aggressors, plus taking over control here, because after that level at 90 cleared here on the tape from the buy side, right, is basically 0 versus 525. And now the buyers are not taking as much as efforts to attack that higher level here. And that's perhaps, they want to keep sellers engaged. They just print small contracts here, because they see that, okay, the sellers indeed are attacking, but this year number, well, it's not really changing. I mean, yeah, we saw that about 500 contracts pulled out after a weak attack, 2 contracts, right? I believe it was. And now the sellers are attacking a little bit more aggressive with 90 contracts. Now the buyers test again the sellers here. Okay. Let's see if the buyers can keep control over that 85 level. Now you see on the 10-year, the price takes 1-2 ticks lower, while, well, basically on the 30-year, it's still at the current bid and ask, right? So, and we already start to see some backtick action, and again, the buyers are the aggressors currently and in control over that level at 85. Now, the sellers should not clear that level. And if they do, then I will look for a exit at least break even. Yeah, we see over at the 30-year that the sellers are definitely the aggressors currently, but so far buyers tend to hold that level, and I see the numbers also getting bigger, so they are, reloading, stacking positions, and now they obviously test the sellers here, just like how the buyers are testing the sellers here again. So in the meantime, we again had some uptick action, right? After some backticking from the buyers. So now the buyers are the aggressors on the 10-year and the sellers at the 30-year. However, one contract is added. 3 contracts from the buyers, 2 contracts from the sellers. And yeah, like on the 10-year, we had a very quick uptick. And again, a small attack from the sellers, another uptick on the 30-year with 4 contracts, right? So the buyers are definitely showing effort, even though the sellers are the aggressors, right? So the sellers keep attacking, even though in small sizes, but the number here is bigger in comparison, right, with what is printed here. But if we look at the isolated, I guess you can call it, attacks from buyers versus sellers, so not the total amount so far, but 12 currently attacked from the buy side, just like how 6 is, and now this became 20, right? And this number will add obviously to this year number. So let's say if there's another 10 contract attack here, this will change, like 1 additional contract. It became now 10, 11, right? 31, it was 20, 31, 11. Here it was 260 and now 271, right? 1 attack from the sellers, 31 from the buyers. Let's see if the sellers, 1 versus 8 over at the 10-year, and it's still 36 versus unknown. Well, none actually, not unknown, sorry. 44 versus none. Now the sellers attack with 18 contracts. And here we do see diagonally that they are the aggressors, and let's see if they are also the aggressors when it comes to isolated attacks, not the total amount, but 18 versus 18, so basically equally, right? Now here on the 30-year, we obviously do see a big number, 106, and now we see two thousands, okay, 9-ish, 4-ish, 15, 8, 4. Okay. 16, 17, 8, 4. $34, 7, 11. 34 versus 32. 11 versus naught or 0. 9. Okay, we do see that this here number has actually reduced in comparison what we had advertised before. Okay. Okay, so in the meantime, we are about an hour into the session and I'm up $500 in profit, which is not bad. Let's have a look. Let's have a look over at ES. Yeah, so basically it's still the same from the looks of it. Right, very choppy price action. Nah, I don't like it. Let's switch back to the 30-year. And if I look at the time, it is now exactly 15, as in 15 minutes past 9 p.m. So basically I just have something of a half an hour before the New York session ends. Well, technically 45 minutes, but quitting about 15 minutes ahead before the end bell. I'd consider the day done. Now, if this here 10-year starts to test the 95 level, and if we do see some contracts printed there, I will cancel my sell order at the 60 level here over at the 30-year, because what I see currently is there is some absorption going on, and every now and then the sellers do indeed. Okay, damn, I was just too slow. We don't see any contracts printed here though, so that works in my advantage. I just wanted to cancel my position as soon as the buyers were testing this level here, but immediately the attack stopped. The sellers started to backtick, and now they are hitting the bids. At 90, cleared it, and now the current bid-ask level. Let's see if the sellers are willing to spread to cross the spread. And if that's the case, then yeah, that one tick to the downside might just work out, because when I notice that absorption and that backticking every now and then from the sellers, right? That's why I placed a sell order here, while the 10-year is every time retesting the current ask level. It may reflect on the 30-year, obviously, and when that happens, I will be yet again one tick in profit. Okay. We just see a very aggressive attack, right? Now let's see. The buyers just, okay. The sellers now hit the bid. So if the price takes one tick to the downside, it should exit my current short position, and it should trigger my buy position. Why didn't it do that? Let me try to enter manually. Yeah, and that's the thing. Sometimes you just don't get filled via limit order, so we have to consider taking a market order. But I will only do that if that I know and I have somewhat confirmation that I have buyers, let's say, behind me who are willing to lift the offers. Now on the E-mini S&P, obviously that may happen faster, right? On the treasuries though, it's a little bit different story, but eventually the concept or the idea behind it is basically the same. So let's see if I can catch one more position. So currently at the 10-year, the bid-ask levels read 16 versus 1700-ish, and the 10-year 68 versus 6300-ish. Right, 1717, 6864. Okay. Now, currently, the sellers are attacking the buyers, and if they keep attacking, or buyers start to pull out their orders after this sheer attack gets bigger, only to then, start to absorb at a lower price level, because that is exactly where sellers are, aiming to push through, right? And that's why if this here order suddenly disappears with no attack or very small attack, right, from the sell side, they will do so because they know, okay, there are sellers present. They are willing to, take market orders. So, yeah, they may start to accumulate here and then pull out, some orders, and then induce more sellers to attack, only to accumulate again at lower or better prices before, going from absorption mode to initiative mode and gradually lift the offer. Now, unfortunately, my position here did not get triggered because the buyers did not, pull out any of the limit orders here. Now they got instead bigger, right? So in comparison with the ask level, the bid got bigger while sellers were attacking very aggressively. And in the meantime, the 10-year also shows that currently at the inside range, right, of the price levels, bid at 85, ask at 90, that the buyers are the aggressors. But let's see if perhaps over at the 10-year, if we can see it, right, that perhaps buyers will pull out their contracts to engage or induce sellers, and as soon as sellers start to print, they will then again start to refresh or reload their limit orders, right, passively. And yeah, they just got bigger, and obviously the buyers cleared this year level also. And I just noticed that my buy position at the 30-year also got triggered, right? So luckily for me. Now, if this position does get filled, I will, end the session, call it a day. And there you go. Right. So very nice. And I do believe, yeah, we do see some buildup of momentum, but obviously, on the Treasury bonds, it will not happen as quickly or fast as in comparison with the E-mini S&P, right? The ES. First, the buyers will test liquidity before actually attacking. They will keep sellers engaged, right, to accumulate maximum inventory, right? You saw that they basically pulled out here, just as I mentioned earlier, right? And probably the same thing happened over at the 30-year, but I was watching here, so I did not see it. And we do see that the levers also cleared out, but now that they basically over at the 10-year cleared that level, it was not necessarily because sellers became the aggressors, right? But because buyers, are trying to keep sellers engaged, to keep them attacking, and basically inducing sellers, and they will probably reduce their limit orders also to a certain point until they see a more aggressive attack. And as soon as they notice the attack, they will again, because that small number will then be kind of like the tip of the iceberg, hence the term iceberg, right? So yeah, they may accumulate inventory by doing that, and then the sellers will think, okay, let's keep attacking so we can clear it, and the passive participant will only add contracts to the bid level through an iceberg, right? Hidden liquidity before testing that level again, and that goes on and on and on, right? So, and yeah, guys, I will end the session, and just made about exactly $1,000 of profit in about an hour, which is definitely not bad. But the reason why I switched over to Treasury bonds, well, we all saw it right in the beginning of the video, is because whenever ES is very chaotic, unreadable, I choose rather not to risk capital on taking crap positions, but rather either come back later when the price action is good and order flow is readable, and if not, right, I can always choose my secondary products like the US Treasury bonds in this case. So yeah, guys, there you have it. I hope you guys enjoyed the video. It's a long one in comparison with those from the E-mini S&P, but we definitely went over good stuff, and I just hope you guys got some value out of this live scalping session. If you have any questions whatsoever in regards with the positions that I took, why I took them, well, you can obviously hear my thought process, right? But if it still does not make sense, or you have other related questions, right, don't hesitate to ask them in the comment section below, and I will do to the best of my ability to answer them probably. So yeah, I will catch you guys in the next live scalping session, and I wish everyone a blessed, well, in my case, evening, but in your case, it may be, night, day, afternoon. So Stay blessed, and I will catch you guys. Bye.